following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's all about the dollar caving in right now. Let's take a look at the dollar really quick. Hope you guys are doing well and happy St. Patrick's Day, but let's get right into it. This is relatively important. Here's the weekly on this particular instrument. Now we're getting down below where we had kind of retraced back before. Unfair lows around 95.40. All right, so here's the daily situation. Talked about the breakdown. Going to have to wait bare minimum for some new information to appear on this to even think about nibbling on the long side. But I think the writing's on the wall with this. And how does this affect the other currencies now? We've been kind of looking at this and trying to nibble on some longs on the not the euro actually, but the Australian dollar had a pretty good run up here, had a good retracement back down into that area, that 74.40. I think we reached a low of 74.15, a little bit of noise factor there. Nice ramp up. We're looking for 80 on this thing, folks, ultimately. And we're going to take a look at the Canadian really quick. Again, my travel plans are over. The free lunch is over. So we're going to take a look at the Canadian dollar. I cannot go up and... What do they have up there to eat? I don't even know. I can't eat them all, though. Anyway, as we're looking at the Canadian dollar, 130 now, we started looking at this breakdown happening around that area around first time we were kind of letting somebody else pick the battle. 137 and some change on the weekly. That was that technical breakdown on the Canadian dollar. Here's the daily. That 130 first started breaking down around 141 and some change, 141.27 to be exact. So again, had the intermediate breakdown first and then the weekly. And as you can see, we kind of use those as barometers, let somebody else figure out the battles at the top. We did get that indication, that yellow bar, remember? And if you look at this and you use the scanner, you know, you look at these moves up and you just let somebody else figure out the high print. When we start getting these new profiles attempting to appear, that orange bar, this is our daily on the Canadian dollar. Guess what? That was the high print area, all right? Then we get the new profile, then we explore it. Then we have a chance for some trading opportunities off the inflection points. Then we get the change in tone, the breakage of the profile itself. And I'm not eating at Ralph's, guys. But I hope you guys see, you know, we talk about this, I hope till it's boring, but it's the same process, you know. I mean, here's the situation, here's the new profile attempting to appear. Here's where your longs are, you know, in danger. Not necessarily a time to go short yet, just a time to take the targets and hit them. And right now, just as we had right there on the Canadian dollar, going down, new profile attempting to appear, time to take some weight off. Then we had the breakdown, had a little bit of noise, and now we're just completely, especially on the weekly, no new profiles attempting to appear on the long-term trade, has just been writing on the wall. And now my travel plans to Russia are also thwarted, and North Korea maybe also. You know what, that's... The U.S. warns citizens not to travel to North Korea. Have you ever thought about banning that instead of a warn? That kid from UVA just got 15 years hard labor. Did you hear about that? First, you know, I've done some stupid things in my life. There's no question about that. But grabbing a banner a propaganda banner in North Korea while I'm in North Korea may trump anything stupid I've ever done. Man, I'm not saying the kid deserves 15 years hard labor, but he deserves something for being that stupid. If that's true. Don't want anything like that on anybody, especially a U.S. citizen. But man, I mean, how dumb can you get? It's crazy. Anyway, so the ruble, this is now starting to break down. We had a little bounce off of that unfair low, as you can see on the weekly. 69.03 had a decent bounce up into 71.72. Now we're getting not a weekly close yet, but this will be the massive change in tone on the ruble, as we had a breakdown before in the long term. And again, you know, the dailies are going to predicate this early. And this is all in the scanner. Here's the breakdowns. Finally had a decent breakdown and held it. Close below, go back and retest around 76. But now we're getting below the weeklies. It's pretty damning events for the U.S. dollar situation. The yen, again, taking a ride down relative to that dollar. Talked about trying to spin around and get some long. Stopped out below 113.72. Talked about that yesterday. Now we've got a major change in tone happening here on the weekly and the daily. Here we go. Getting back down below profiles again. This is not the time to be going long any of these instruments, the dollar or the yen right now. If you guys have any questions about any other currencies, please throw them out there. I was actually doing some custom sorts breakdowns on the S&P earlier. Here's the Forex section of the scanner. It's going to give you all this information. We're going to take a look at the euro. Here's the euro right now, right here, right now. Green across the board. We can assume that. Here's the daily. Here's the weekly. Now closed above that weekly profile, tested it. Let me just show you how this works. Here's the euro. The dollar versus the ruble. John from Philadelphia. Well, I mean, I'm saying that, you know, the dollar versus, when I pull up the ruble, I mean, all of these are relative to the dollar, by the way, that I pull up. I'm not doing any crosses versus the Zimbabwe, blah, 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 whatever. So here's the ruble again, just to show that. Sorry if that was confusing before. Here's the euro versus the dollar. We just assume moving forward. That's what I'm stating. Here's that close above on the weekly and then the retest. Remember, we always talk about this is the powerful trade, not necessarily being the guy who buys the high print in this case, just waiting. Just like the Australian dollar did this same type of maneuver. Low on this, 110.58 this week. Unfair high, 110.43. So again, you guys can see how this works. This is something you should use over and over again. Now, when you listen to the Basils and the Steves and the David Whites and Tom, Larry, a lot of those connotations that they have out there, you can utilize with this particular concept and the John Logans. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were finishing up with the euro. I was just showing this. Again, this type of mechanism is really, really powerful, especially on the weeklies. We had that on the Aussie. We have it on the euro. That same mechanism, by the way, did I close that out? No. That same mechanism, by the way, you know, it doesn't always work. So we're gonna pick one out that I was specifically speaking about yesterday. Wait a minute. Wrong server. There we go. As we're going to look at the 10-year here. So here we go. Close below weeklies. Go back and retest. A little bit too rich for my blood. So this is what stops are for. Doesn't always work. That particular mechanism, and that's a real simple mechanism. You know, relatively dovish comments yesterday. The tight wire, they're walking all the time, not to upset anybody, and the market included. Forget what's going on in the world or the U.S. economy. Actually, you know, taking all things considered in what's going on overseas relative to the U.S. economy and the unemployment rate not being valid, I think those comments were probably right in line with what they should have been. And as we look at the daily, here's the daily on the 10-year. I'm not, you know, looking at the 10-year at all from a short standpoint after we pass that 129. I thought that was the perfect opportunity to try to whack it again. But again, that's what stops are for. And a question the other day, and I had an email about this last week, you know, piling into one instrument, putting all your hopes and dreams on trading the 10-year, for instance. I mean, spreading them out to use this type of mechanism and some of the other things that we talk about across a lot of different instruments, your data sample set's going to be larger. And in my opinion, that's definitely the okay way to trade. A lot of people get addicted to trading one instrument and just get laser focused on it and say they want to understand the pulse of that particular instrument. And that's fine and dandy, but I think you're missing opportunities, in my opinion, by spreading the risk out at the same time. All right. Let's take a look at gold really quick. Man, is that correct? Woo. We're up. Yeah, gold closed yesterday afternoon. It says we're up 38 some dollars from the close yesterday. That's true, but let me look at this here. So the dovish comments, the dollar caving in, everything having to reprice itself. You guys know the drill on that. All commodities have kind of, including oil, we're going to take a look at. But as we look at gold, this is the 240 situation just to show you the move there. Here's the weekly now getting back above 1264. You got to look at that as support now. And as we look at we never got down to that 12, 18, 19 area yesterday that we talked about would be the good support. But I want you to kind of look at how this has acted. So close there. Theoretically, the open on the daily, to come back and retest this 1253.2. The low there's 1255. So getting to the neighborhood like Joey was talking about. Again, not wanting to miss the trade by being a little too stingy. I want to show you this on the 240. So here's the 240. There's that low print at 1255. This is a great example of using those inflection points, letting the market come back to you and focusing on, those Maginot lines. The long-term inflection points I'm a huge fan of. So that weekly and daily, that 1253.20, getting into that neighborhood like Joey talked about, starting to leg in that noise area for the longer-term view. Not getting sidetracked with trying to short an instrument that, all things considered, if we go into the scanner, and I show you guys a lot of visuals on the charts, but if I go into the scanner and I pull up gold and I see, there's that yellow peel back happening. Wow. Okay, so we're going to take a look at that. But as we see here, the long-term trend, and again, weekly unfair high being breached and still in what we call the top range. We're going to take a look at the landscape view. That's where the level of the market is right now. There's that pullback in the 1250, that 1253 general area. And gold right now, we're starting to show a new profile attempt to appear on the scanner. We're not showing that on the chart right here, but trust me, that is actually something attempting to happen here with that yellow peel back as we see there. So again, I'm not a big fan of shorting this. I think you've had a decent pop off of this 1253 area. We haven't had a weekly close again above this 1263 to 64 area. So can look at that as leverage to move up, but again, I'd be taking some weight off. We've had a decent pop here. Do I think we can go higher? Yes, we can. We got to take a look at silver. I'm kind of like doing like this. This is kind of amazing. It won't even reprice itself to lower dollars, to crappier dollars. It won't even reprice itself higher. So, again, the gold-silver spread, if you want to look at some kind of intermarket spread like that, not intra-market spread, you got a big lid at 75 and 80, 1575, 1584. This is kind of holding, put a gun to my head. I got to be short silver and long gold. All right, looking through the den here. Here we go. All right, so we covered silver, gold, notes. Hadn't looked at the S&Ps yet. We're going to take a look at crude oil. This is, again, I'm looking at this with the 3850 as a talked with Tom yesterday afternoon for a while about this, and this thing hitting our targets ultimately 36.5 and then getting completely out at 38.5. These weekly unfair lows. This kind of reversal and crowd and compression up into this, with the dollar caving in like it's doing, talked about possible targets now going to be around this 42 general area. How do you trade this? I like the action. I like that 3850 on the weekly and the daily now. I'm looking at that as support for this to move higher. You had some pullbacks that we talked about that could have been bought around this 35.64 into 36.26, that 60-point range there. We talked about, again, the yellow peel back happening in the scanner, being at that 38.5, being able to try to buy this again a little bit lower. We got into that DMZ. We had the targets met again at 38.5, and I think you need to leave some on now, if you guys see that. So how did we regulate that trade? We met our targets at 38.50. We said, hey, you know what? Let's try to find support again. That support was offered down here in this DMZ. We talked about that. Here's the targets again being met. You got to take off some up there and leave some on because of this crowding action. Now you've got about half your position on. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Don't you love these short breaks now on TFNN? Power-packed hour. Hey, what do you guys think about these bank CEOs? Did you keeping up with that? How does a bank? I guess a bank never loses money, so they're always guaranteed to. Jamie Dimon's running a criminal organization. He makes $27 million bonus this year. Brian Moynihan, Bank of America, $16 million. Unbelievable. If a bank loses money, then the government bails them out. I guess that's the way that works. Man, We got to get a job over there. Anyway, exactly, Jay. It is a nice gig. Another thing too, I was reading with, it said that Apple's spending about $1 billion a year with Amazon web services. So if you have an Apple, I don't have an Apple. These are stories I hear. You've got the cloud services. A lot of things are backed up. Blah blah blah. So they're spending $1 billion a year, so they're spending a lot on infrastructure to get away from that. And we used to use AWS for all our servers, and they ran us. I mean, it's like I assume like a drug dealer. They get you in with all the free stuff, and then they're cooking crack in the back and charging a bunch of money. It's kind of Amazon's similar situation. I mean, we went in there and got the free services and kind of got involved with them, and then all of a sudden we're spending thousands and thousands of dollars a month running servers out of their infrastructure. It worked okay. But there's other services out there to run these types of mousetraps, and we found one that was about less than half the cost actually. And I think that's probably what Apple's coming to the realization is why don't we just do this ourselves and save bundles of money? I'm sure they can run this whole thing for probably a third of what Amazon's charging them. So just wanted to get into one other thing here really quick. As we look at a custom store, we're going to go into our dashboard. This is something that when the markets have gone up like they've gone up lately, and I feel like we should have had even a bigger reaction yesterday than we did, but now I think the heaviness of the market in general, and the ability for it to at least come back and retest 1971 on the June contract, in my opinion, you want to try to find some painless trades if you're wrong. I'm looking at breakdowns in the scanner. There were some things that were definitely on the radar screen. Bristol Myers Squibb, BMW, Alexion Pharmaceuticals, ALXN. I really like this one. Just completely not cooperating with the market move up, and if the market does happen to turn south, these are ones that are kind of in breakdown mode. ADS, Alliance Data Systems. Let's take a look at that one. So here's ADS again. This is a really cool trade, in my opinion. You've been in a protracted downtrend. Alliance Data Systems. You got that again, the kind of the take the weight off yellow bar that probably was yellow starting back in the 189 general area, and then we just had a big bar there. But we came up and retraced back up into that weekly unfair high. And I want you to see how this works. I mean, these aren't painted post after the fact. I mean, these are known when this yellow bar is happening. So we got up into this unfair high. I'm going to pull this up, and there's the 218.36. There's that weekly chart showing this, just as I showed you on E-signal. There's that 218.36. And as we look at this, the daily, now we're breaking down below this 210. So again, here's the daily. Let me point this out. Let me just show you. So in a market that's, in my opinion, got the ability to retrace back and pull back a little bit, you want to find stocks that are already showing themselves weak in that type of scenario that I just stated. So if and again, if the market just skies, which it just doesn't feel like everybody's getting to their, Ameritrade stock platform and banging the B button. And technically, I think we deserve a 1971 pullback. These are the type of stocks that, again, I think are going to fall faster and easier than some of the ones that have showed strength. The ones showing the strength, if I go into uptrend here, these are ones, and by definition, you probably want to stay away from on that type of scenario in shorting. And we've tried to make this thing pretty easy to use now. Here's our strong uptrend. Here's ones that were showing. Let's see. Uptrend reversals. So these were stocks that were in an uptrend that were kind of reversing down. These are ones to take a hard look at. ZTS, let's take a look at this one. I like the action. I like putting stops above 40.81 on this one. And again, we're looking at relatively weak stocks relative to what the market's been doing. That wasn't the absolute best one to look at. Let's take a look at another one. These are all stocks that have kind of been, there's Bristol Myers that's showing up in this short too. Let's look at BMY. These are just ones that, scanners kind of put them on your radar screen. You can put them in a custom portfolio, and Russ actually mentioned something a while ago. It was a great question. Can you put alerts in for things like this? This is Bristol Myers. Again, not wanting to close above that 65.26 on the weekly. Now you've got targets down below 59.16 on Bristol Myers. Now we've clean and cleared 63.35. So again, I know we've pulled back off of those weekly unfair highs, but I think we've got a ways to go. Could rattle around here a little bit. You've got some leverage at 63.35 to put stops against, and then your target on the downside is 59.16 on this. And again, healthcare not looking well at all. That's the sector. I don't think we're going to rotate out of that sector if we come back down. And going back to the ETF sector, again, you look at the daily. Healthcare is in the cellar when it comes to the daily, the weekly, the 4-hour. No mystery to anyone. If we drill down into the healthcare sector, you're going to be able to find some opportunities here on the short side. And if I want to just find out the healthcare sector was trading below profiles in the weekly, or even with let's just kind of click this really quick and get a sort going. Arrow down. A lot of these stocks are in the balanced area, but yet still have arrows down. So as we look at this, let's just take a look at LH. This is a weird one. I think this is out of Durham, North Carolina. Laboratory Corp. Did I type in the wrong symbol? We'll be right back, guys. I'll do a little research on that. Let me see what's going on with these signals.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And we're in the scanner. We want to, again, we want to take a look at things that are, decent situations to trade. I was looking at PDCO. Here is MCK. So, as I was in the scanner, I was just, these are stocks sitting at the top of the profile here on our weekly. Hold on 2 seconds, guys. I want to get a host on here. So as we look at the XLV, I was doing a sort here top. Now, what does that mean on the weekly? So that means that these are stocks having their price action right now at the top of a weekly profile. So let me just go to no sort here. And I was just looking across it, and I had a kind of was sorting a column here with the neutrals at the top here and looking for arrows down. And I was looking at MCK. This was on our breakdown list, actually. If I go over here, I would see it. Stocks that are breaking down. There's MCK. That's in the healthcare sector. There's the XLV. But when I go back to the ETF, the healthcare sector, when I go back to the chart, and here's MCK, you might want to say, okay, well, wow, thanks for letting me know it's breaking down the daily, but wow, why didn't you let me know it was up near the weekly for high so I could really hit it? This particular sort we're going to get into in a second will show you opportunities like that, and Russ, at some point in the very near future, we'll have alerts for things like that. So I think we've got Joey on right now. Let's break over to him. Joey, are you there?
Yeah, I'm here.
Great. It's
Hey,
Joseph
John,
Jung from Hong Kong. Thanks for joining us today. What's on your mind, man?
Yeah, we had the nice rally, up above the kind of 2015 to 2020 level that we were talking about yesterday. And now it's just kind of coming back below that again. I guess yesterday's rally wasn't as impressive as I would have liked it to be, especially given that such a dovish tone from the Fed. I would have wanted a more broad-based kind of rally, but yesterday was really just led by the commodity sector, and really just spotty on the techs. There's some techs that did well, but other than that, the rest of the market didn't really participate that much. And also the small caps and healthcare stocks continue to lag. So,
right.
That's one area we're looking at. And then I guess this is kind of a pivot point area that we're still bouncing in and out of right now.
Right. Yeah, I hear you.
Sorry, I wasn't on the show earlier, so I didn't really get to see what you covered before.
It's pretty directly in line with what I was saying. It's just it doesn't feel right. Something feels a little heavy here. that reaction should have, been a little bit better than it was. And we're kind of sloughing off. And I know the market's kind of gotten that out of the way now, but, it was kind of so-so news, dovish, but nothing really outstanding like you're saying. But it's interesting how you brought out the healthcare sector in general, because not participating, we were looking at, trying to find out, how to get to these opportunities as quickly as possible in a situation where the market, may not rise. So therefore, we might want to block out some longs and try to take advantage of some weak stocks. And we were looking specifically in the healthcare sector because, looking at the breadth on the ATF, the XLV was, I'm looking at it right now, obviously starting to just barely positive on the daily breadth, and then starting to roll over in the short-term time frames. Was trying to find some opportunities, and Joey was just showing people how easy this is to use. I mean, if I go in here and, I want to find things that are rattling around and maybe rallying up near the bottom of our inflection points on 2 time frames or the weekly, these are things that these are instruments in the healthcare sector that are just getting into a ripe area to hit again. This BXLT, I don't even have to look at it to let people. This is let me go into our e-signal to show this. BXLT. This might be a new issue. Well, we're waiting for that to come up. I'm getting a little bit more on the same page with you on the oil trade, by the way. I think we got to leave some on now to maybe wait for a 41.5, 42 area.
Yeah, 41.5, 42 is the area that that really is. That's the weekly unfair low that's gone back for a long time. So that's a pretty strong area of resistance, and we're about to roll to the May contract, and the May contract is trading at 40.5 right now. So it's not that far to go.
Right. Right.
Yeah, because of the
dollar's
because
really
of
going to
the
help
different
that
contracts.
Trade. Dollar's really going to help that trade too. BXLT.
Yeah.
This is what I was talking about, guys. We're sitting right at the right at the bottom of our profiles on the weekly. This is pretty damning. We've hit, we started closing below on the daily. BXLT in the healthcare sector, and the market doing what it's doing. This is really showing some relative weakness. And the scanner picks those things out so easily. I think we've got a caller, David from Clearwater. David, are you there?
Hey, John. Good morning.
Hey, man. Good to talk to you again. How are you?
I'm doing well. How are you?
Good. Awake this morning.
Yeah, no, I hear you. I hear you loud and clear, especially anyone who's trading currencies is awake after the Fed's conversation yesterday.
No kidding.
But, yeah, no doubt. It totally stopped me out of my my Canadian U.S. dollar pair. But the good news is I shouldn't say stopped out. My stops were hit. I made money on the trade, but unfortunately, I wasn't in front of a screen because I don't trade for a living. It's like a hobby of mine.
Right.
And so I can't be in front of the screen, so I have to kind of do longer time frames. But I saw that, and I was like, oh man, I missed it. Darn it.
Yeah.
Hey, John, I kind of cut to the chase because I know time's short here. So
yep.
Again,
got about a minute before the break, so go ahead.
Thanks. Appreciate that.
Yep.
Okay, so here's my question. I'm pretending like I never learned anything from Tom and Larry and the other guys, and saying to myself, if I was just going to, if the only thing I ever knew about trading was using DAS profiles, how would I use this so I can fully wrap my mind around the scanner?
Mm-hmm.
So here's a question. This might sound really stupid and silly, but please let me ask it just the same.
Sure.
So let's say you're looking at an instrument, like I've been hitting the currencies here lately because I'm sick of trading natural gas all the time.
Yeah.
So you look. Here's my question. So you look on the profile. Let's say the whatever Canadian dollar, for example, and price is above your daily profile. So it would make sense that you would want to buy support. So if you're looking at a daily profile or 240 or the 60, does it make sense to keep that same support level on the daily, or in other words, the moment you cross over the, let's say, the unfair highs, and now you're in a bullish mode, would you then look to buy support on the 16?
Dave, we got to go to break. I'll answer when we get back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, welcome back to the show. Dave, are you still with us?
Yes, sir.
Okay, great. So your question, the way I understand it, is, I think we still got Joey, right? Joey?
Yeah, I'm still here.
Okay,
Hey, guys.
great. Let's try to answer this together. Dave, you were saying, like if we get above one profile, how do we kind of use the other time frames to maybe help with that process? Or
Yes, sir. That is exactly my question.
okay. So yeah, there's a couple of different. Okay, so in the stock world, and Joey, you got to jump in anytime here. In the stock world, sometimes we don't necessarily want to wait until we just have a green sell. And when I say that, I like to use, just like we talked about with this relative strength concept before, I mean, the market's been going up. We might want to find things that are trading within profiles that have been in a protracted downtrend to try to sell those inflection points at the top of a profile or sell the breakdowns. And that's when, obviously, before I had just gone straight to this breakdown section. That's my currency section. Let me hit breakdowns here. So it gives me candidates that are just in 1 or 2 mode on the daily and the weekly. And that gives me things to just say, wow, man, of all times, these things are just starting to break down below balanced areas. But then again, if I want to come in here, and I'm going to answer your question in just a second, fully, hopefully. If I want to come in here and I want to say, you know what, which one of these are just kind of trading up into the bottom of the profile on the short side that have been in protracted downtrends? Celgene, Electronic Arts, even though we've got greens over here, these are kind of the more powerful longer-term time frame inflection points. But to answer your question, and there's a lot of ways to find opportunities in this scanner, in the stock world, an incredible amount of ways. And you're using breadth also to kind of get that broad tie to the marketplace, as Basil said. But on, let's say, green on crude oil above a profile on the daily, I like to look at longer term setups like, you're not a full-time trader. Sometimes that's a good thing. And when you look at these longer term setups, I kind of use, and our automated systems do this also, we use lower term time frames to regulate that trade up or down. So the 240s turning red would be a very simple kind of stop out situation, along with those yellow peelbacks for targets, and I've got a couple of videos that I think TFNN's got on the site about concepts like that. And we could talk for 30 minutes about this, Dave. I really wish we don't have a lot of time right now because we're closing the show. If you could call in tomorrow, we could really go through this.
Yeah, no, that would be great. I don't know if there's rules for, only get to call once a week or whatever.
No. These are great questions, and everybody needs to know this. So if you can call in tomorrow, that would be insane.
Right. Oh, that would be great, because the thing is, John, I'm trying to teach a couple of my friends.
Man,
and
do it.
You know what I'm saying? How to use it, because they don't know anything about technical analysis. I said, look, I got an idiot-proof software for you, man. It's real. I'm trying to. And then he started hitting me with these questions. I'm like, wow, these are really great questions.
Idiots for idiots. No, just kidding.
Well, that was a good question on the Canadian dollar, because the Canadian dollar actually has been in a long-term kind of downtrend, and it basically bounced back just up to the bottom of the profiles, and then the way to look at this is you're always looking at areas to short. Because we're in a long-term kind of downtrend. So every time it bounces back, and as long as you put the stops, at the top of the profile, then you're okay.
Thank you so much, guys. John, I'll call again tomorrow. Thank you for the invitation. I greatly appreciate your time.
Man, you know what we'll do? We'll record the whole question and answer session, and we'll be able to put that on the TFNN site also. Great.
All right, guys.
Joey, thanks.
Thank you.
All right, take care, guys.
Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.